All right, everyone, it's Monday, January 26th, 2026, and we need to talk about what just happened because the financial world just witnessed something absolutely historic, something that critics and skeptics have been saying for years would never happen in our lifetime. And yet, here we are, living through it right now. Silver just absolutely obliterated the $100 barrier, and I'm not talking about some brief touch or a quick spike that immediately got rejected. No, we are talking about a complete and total shattering of this psychological level that is held in the minds of investors for decades. But here's what nobody is talking about. Here is the part that should actually concern you, and it's the reason I'm making this video right now instead of celebrating with everyone else who's watching their portfolios turn green. The real question isn't whether silver hit $100 anymore. That already happened. The question that should be keeping you up at night is how high can this metal actually climb from here? And more critically, are you personally prepared for the absolute chaos that comes with triple-digit precious metals? Because I'm going to be brutally honest with you, most of you watching this right now are not ready for what's coming next. Gold is literally knocking on the door of $5,000 an ounce, and silver is trading above $130 in Asian markets as I'm recording this. So the entire game has changed, and we need to understand what's actually driving this insane price action before you make a decision you might regret. Now, let me show you the data that everyone needs to see right now, because this isn't just hype or speculation anymore. We are watching a complete structural collapse of the gold-to-silver ratio, and if you understand what that means, you'll realize why this is so significant. Historically, when gold starts moving aggressively upward like we're seeing right now, silver doesn't just follow along politely. It acts like a slingshot that's been pulled back for years and then suddenly released with explosive force. But what's different this time, what makes this situation unlike anything we've seen before, is that we now have confirmed reports of actual physical shortages spreading across multiple continents simultaneously. In India, silver hit 3.75 lakh rupees per kilogram today, and that represents a 10% jump in just 96 hours, which is absolutely bonkers when you think about the scale of the Indian precious metals market. The premiums on physical bars in the United States and the United Kingdom are completely decoupling from the spot price, and you know what that means? It means the metal simply isn't available to meet the delivery requests that are flooding in from every direction. This is what traders call a blue sky breakout, and the reason that term is so important is because there is literally no historical resistance above $50. We are in completely uncharted territory where traditional technical analysis kind of goes out the window, and we're operating on pure supply and demand fundamentals mixed with a healthy dose of panic and speculation. But now, I need to give you the warning that nobody else is talking about, because I genuinely care about your financial well-being, and I don't want to see people make catastrophic mistakes during moments of extreme market euphoria like what we're experiencing right now. When an asset goes parabolic, when it shoots straight up vertically on the charts like silver is doing, the biggest risk isn't actually the price crashing back down. And I know that sounds counterintuitive, but hear me out. The biggest risk in these situations is actually you and your emotional decision-making under pressure. I'm literally seeing comments and messages from people asking if they should mortgage their house to buy silver at $110 an ounce. And this is exactly what I'm talking about. This is the psychological trap that wipes out more investors than any market crash ever could. The market has a way of being designed, whether intentionally or not, to absolutely wash out the latecomers who jump in at the peak because they have fear of missing out coursing through their veins. We are likely, and I want you to really hear this, we are likely to see $20 swings in a single trading day at these price levels. So just imagine for a second that you buy today at $110, you're feeling great about your decision, you go to sleep thinking you're a genius, and then you wake up tomorrow morning to silver sitting at $85. Nothing fundamental changed overnight. The supply shortage is still there, the gold ratio is still collapsing, but can you personally stomach watching a 25% drop in your portfolio value in less than 24 hours without panic selling at the bottom? Most investors, and I'm being completely honest based on what I've observed over years of watching markets, most investors are simply not ready for the kind of volatility that comes with triple-digit silver prices. They treat precious metals like a boring savings account that just slowly appreciates over time. But at these elevated levels, this is no longer a sleepy corner of the commodity market. This is a high-stakes battleground between industrial users who are panic buying because they need silver for manufacturing, and sovereign debt concerns that are driving people into hard assets as a hedge against currency devaluation. So let's talk about price targets, because I know that's what everyone really wants to know. How high can this actually go before we see a major correction or reversal? If we adjust silver's price for real inflation since the 1980 peak, $100 is arguably just the starting point of this rally, not the end destination. Some analysts who I respect are projecting $250 an ounce as a reasonable target if this momentum continues, and there are even some wild projections out there suggesting the golden ratio implied price could push silver towards $600 or higher if we see an acceleration of the dollar crisis that many economists have been warning about for years. But here's my personal take on this, and this is the strategy I'm using with my own positions. My target isn't actually a specific dollar amount, because trying to pick exact tops and bottoms is a fool's errand that will drive you insane. Instead, I'm watching the gold to silver ratio like a hawk, and if that ratio hits 30-1, that's going to be my personal signal to start scaling out of my positions and taking some profits off the table. I'm not saying you should blindly follow what I'm doing. Everyone's situation is different and you need to make your own decisions, but please do not chase green candles without having a clear exit plan in place. Because yes, the moon might be the ultimate destination for silver prices, but the rocket ride to get there is going to be violent, turbulent, and designed to shake out everyone who doesn't have the stomach for extreme volatility. My honest opinion after watching this market for years is that we are witnessing something truly historic, and I genuinely believe that precious metals are going to play a crucial role in portfolios over the next few years as we navigate whatever economic challenges are coming our way. But with that said, the worst thing you can do right now is let emotions drive your decisions, whether that's fear of missing out causing you to buy at irrational levels or panic causing you to sell at the worst possible moment during a temporary dip. Stay safe out there. Keep your physical stacks secure if you already have one. Don't let FOMO bankrupt you by over-leveraging or making desperate moves. And remember that preservation of capital is just as important as growth, especially during times of extreme market volatility like what we're experiencing right now, with silver breaking through barriers that seemed impossible just a few months ago.